So a quick look at Asian markets today. We are seeing weak leads coming through from UK and US markets, which came online on Tuesday after Monday's market holiday. But that said, Asia itself is finding its own leads, particularly with all eyes settled on China's PMI data this morning. So what we've seen with the number at 51.2 unchanged from April is that it's actually a better than expected number. The market's median consensus had been pointing at 51.0, and I think what the market itself was really expecting weak leads. We had the MSCI Asia, excluding Japan index itself, on 3 days of three consecutive session of declines, and I think what we've seen today is a reversal of that with what's happening in China. So I think with the number itself, it's really showing the market that China's momentum is not exactly slowing down, despite the fact that there had been concerns with production, fixed asset investment and commodity prices on the decline lately. So for the market itself, I think what the number itself is a positive sign, but of course I think what's going to happen on Thursday with the Caixin private gauge is really going to change opinion should we see a significant miss over there. So as with the official number, the market is expecting the Caixin gauge to come in slightly slower at 50.1 in the expansion territory, down from 50.3 in April, and I think we should really watch for that. But in the meantime, the likes of China, the likes of Hong Kong and the local Singapore Straits Times Index are really seeing some positive leads coming through from there. But moving on to other indicators, we have also seen Japan's industrial production for April coming through, and I think even though the number in terms of month-on-month comparison was up 4%, that's the highest growth rate since June 2011, it had missed the market's expectation and created some sort of dampener for the Nikkei 225 that we see the clients are trading. But that said, we did see the dollar itself actually retracing some of its losses lately, and for the dollar yen that showed up above 111 spot 20 has really given the Nikkei markets a lift and a boost over there. But speaking really about the currency market, I think what really interesting today is that we have seen the Chinese yuan fixing adopting a new mechanism. So what we have with the Chinese yuan mechanism is that the authorities has included a new counter-cyclical adjustment factor, and for many of the traders, retail traders, I think really just to know the fact that this is something that the Chinese authorities are more concerned with the outflows over here with regards to the Chinese yuan. And I think although this problem itself is really one that is more prominent in 2015, I think the control over here has really helped the yuan, and I think in terms of how that translates to the market movement, I think that's really positive for equity markets here in Asia as well. And as we have seen this morning, we can see that the Chinese dollar CNH, the offshore yuan against the US dollar itself, had actually slipped slightly this morning and was trading at 6.81 when last checked. So moving quickly on a quick note on the Australian markets as well. So we have suddenly seen that the Australian market as a whole been lifted by the PMI data this morning. But that said, the sectors leading this index, this gain had been these consumer discretionary and also the financial sectors. But on the other flip side, we do see materials being on the decline, as well as commodities, particularly in China, are actually still on the slide, really not feeling that jubilance from the PMI data that came through this morning. So I think for those trading in terms of that sector, that's really one to continue watching for in the coming trade sessions.